A restaurant owner called me the second week of April last year. He'd just gotten off the phone with his CPA. After 3 weeks trying to prepare his tax return, the CPA finally said, "I can't file this. Your books are unusable. I had to rebuild your entire year from bank statements." His CPA bill, which normally came in around $2,500, came in at $8,700 just for tax prep. The books were still a disaster. And his CPA told him point blank, "If you bring me books like this again next year, I'm not taking you on as a client." I'm Bev from bookkeepingcoach.net. The week after April 15th is when my phone rings off the hook, because that's when business owners find out the truth about their books. Their CPA just flagged problems. The bill was 2 or 3 times what they expected. They overpaid in taxes because deductions were missing. And now they're asking, what do I do now? Let me tell you what I told the restaurant owner. He ran a $1.8 million farm-to-table restaurant. 4 years in business, great food, and packed on the weekends. Behind the scenes, his financial records were held together with duct tape and prayers. He had a part-time bookkeeper who categorized what she could and just left the rest. Later, never came. Here's what his CPA found: 437 uncategorized transactions. Every single one had to be researched and correctly assigned. 7 months of unreconciled bank activity. The CPA found 23 transactions in the bank, but not in QuickBooks, and 11 in QuickBooks that weren't in the bank. Duplicates, manual errors, accidental deletions, a $14,200 sales tax discrepancy between QuickBooks and the state filings. The CPA couldn't file the income tax return until it was resolved because it directly affected the revenue numbers. Payroll that didn't match, wages on the P&L that didn't tie to the W-2s, the 941 filings, or the state payroll reports, a $9,400 difference, cost of goods sold that was meaningless, food costs, beverage costs, and supplies were all lumped together, some coded to general expenses, some to COGS. Nothing was consistent. His food cost percentage was somewhere between 28% and 41%. That's not information, that's a guess. $22,000 in owner's draws were recorded as business expenses, understating his actual profit and making his P&L basically fiction. 2 business credit cards missing from QuickBooks entirely. $47,000 in annual charges were invisible. The CPA billed $8,700, 40 extra hours of work just to fix the books enough to file. But the bill wasn't even the biggest cost. His CPA estimates he missed $31,000 in legitimate deductions, roughly $9,300 in taxes he never should have paid. He was running a special on a dish he thought was profitable, and it was losing $3.40 per plate. He served 1,200 of them. That's $4,080 in losses on a dish he thought was making money. He bounced 2 vendor payments, lost his net 30 terms, and had to pay COD during the holiday rush. Total quantifiable damage, over $26,000, because the books weren't maintained. When a CPA says your books are a mess, they're usually talking about some combination of these: uncategorized or miscategorized transactions. Every transaction needs to be in the right account. Incomplete and wrong are both useless. Unreconciled accounts: if your QuickBooks balance doesn't match your actual bank balance, something is wrong. Either missing transactions, duplicates, or wrong amounts. Personal and business expenses mixed. I see this in almost every small business. Your P&L is wrong, your equity is wrong, and your CPA can't determine your actual business profit. Missing accounts or data sources. Credit cards not connected, PayPal not recorded, cash transactions not entered. If money flows through a channel not in QuickBooks, your books are incomplete by definition. liability accounts that don't reflect reality, sales tax, payroll taxes, loan balances. If QuickBooks doesn't match what you actually owe, your balance sheet is fiction. No documentation trail. If your CPA can't explain a $4,300 expense and there's no receipt or note, they can't confidently deduct it. And if the IRS asks, you have nothing. Here's what every business owner needs to understand. Your CPA should not be fixing your books. Their job is to take your accurate financial records and prepare your tax return. When they fix your books first, you're paying CPA rates at $150 to $300 an hour for work that should have been done at a fraction of that cost throughout the year. So if your CPA just gave you the bad news, or if you already know that your books have problems, what are your options? Well, option one, do nothing. Bring the same mess back next April. You know how that ends. Another huge bill, more missed deductions, and eventually they will drop you as a client. Option two, try to clean it up yourself. This can work if the mess is small and you have some bookkeeping knowledge. If you have 437 uncategorized transactions and months of unreconciled accounts, you'll likely make it worse before you make it better. Option three, get the right training to understand your books, maintain them properly, and never have this conversation with your CPA again. Don't let shame keep you from acting. Every business owner I've worked with who had this problem felt embarrassed. And that embarrassment is what keeps the cycle going. You avoid the books because they stress you out, which makes them worse, which makes you avoid them more, and on and on. This is exactly why bookkeepingcoach.net exists. You're not a bad business owner. You're a business owner who hasn't had the right training. Nobody taught you this. And the longer you avoid it, the more it costs. Head over to bookkeepingcoach.net. The link is in the description. And if your CPA threatened to drop you, take that seriously. Good CPAs are hard to find. Don't lose yours over something you can fix. Subscribe for more bookkeeping tips, and I will see you in the next video.